What's up, everybody? GenExDividendInvestor here. A subscriber on my free Dividend Discord server suggested that I run a series of polls to let people vote on their favorite stocks across each of the 11 sectors, and so far hundreds of votes have been cast, and in this video I'm going to reveal the winners for the top 5 utilities dividend stocks for 2020. And then at the end of this video I'll share an inspirational story, so please watch this entire video. For context, I run a free Dividend Discord chat server, which is listed in the description of this video, and which comes up when you type World's Largest Dividend Discord or just Dividend Discord on Google. And as is my normal disclaimer, just consider this entertainment and not financial advice. I also want to thank you for taking a moment out of your day to watch this video. Please consider hitting the thumbs up button, subscribing if you haven't, and click that bell notification. Thank you, I really appreciate the support. Also, please share this with anyone you think it will help or simply might enjoy it. You could really be changing someone's life with that little gesture, helping put them on a better financial future path of building a passive income dividend stream. Okay, stock time. For reference, the sectors are energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, utilities, and real estate. So let's take a look at how the utilities sector as a whole has been doing in the last 5 years compared to other sectors and to the S&P 500. So we see that the S&P 500 has returned about 71%, whereas the utility sector has returned 40%, so underperforming over that time frame. We also see that the worst sector has been energy at minus 54%, and the best has been tech at 187%. My gut tells me that in the short term we'll probably see some more oil dividend cuts if things don't turn around relatively quickly, but that in the medium term I bet oil will rebound quite nicely. So what are utilities? They're a category of stocks that provide services including electricity, water, and natural gas, and because they're a public service, they have substantial regulation. Here's a screenshot of the 5 industries that the Global Industry Classification Standards taxonomy breaks utilities into. I personally like utilities because they're a defensive play that often does better in downturns than other stocks, because other things might be bad in the world, but you need to keep using electricity and water and such. If you want to invest in the utility sector as a whole, you could consider ticker XLU, which is the Utilities Select Sector Spider Fund, which has been around for about 20 years. Utilities represent about 3% of the S&P 500. Using Dividend Channel's Total Returns Drip Calculator, we see that if you had invested about 22 years ago, that XLU has returned an annualized 6.92%, which slightly beats SPY over that same time frame. Okay, let's jump into the poll results. The 5th most popular utility stock in the poll with 9% of voters is none other than PPL Corporation, an energy company in Pennsylvania that controls about 8,000 megawatts of capacity and delivers electricity to more than 10 million customers in Pennsylvania, Kentucky, and across the pond in the United Kingdom. I actually owned PPL years ago, but I got out of it in favor of other utilities. PPL has an awesome yield at 5.77%, a solid payout ratio at 68.5%, a 5-year dividend CAGR at 3.6%, which is about what you'd expect from a normal utility, and a great 20 consecutive years of dividend growth. In the last 25 years, PPL has had a great 10.06 annualized return, which is more than SPY, which has had 9.28% return over the same period. Awesome. Let's see what their stock has done in the last 12 months. PPL is trading around $29 a share, below their 52-week high of about $37 and above their 52-week low of $18, so fairly flat overall. They have a really nice PE of 12.6. Let's see how their stock trend looks over a longer period of time. So not too much movement, but a gradual trend up. Let's look at their dividend payouts. We see that PPL has a very gradual trend up. How about their yield trend? So their yield trend doesn't show too much movement, which means it's not getting more or less compelling over time to enter the stock when you're looking at this metric in isolation. Let's take a look at their earnings per share. PPL has a weak EPS compared to non-utility stocks, but has a trend that isn't too abnormal for a utility, which is a lot of plodding along, nice and safe and boring. That being said, some utilities have better EPS trends, which I'd prefer to see. How about their shares outstanding? So this trend is what you'd expect from a utility, which is that they're issuing more shares to cover their crazy expensive capital needs. Obviously in a non-utility stock, you would usually rather see shares outstanding decreasing. Let's check out how their assets are trending as compared to their liabilities. Nice, we see what we want in that assets in blue are trending up faster than their liabilities in red. Let's see how their revenue growth looks. I'm not thrilled with stagnant revenue growth for a normal company, but for utility I don't freak out, though it's something you want to watch for. You see, utilities revenue and profits aren't like normal companies. Why? Well, utilities don't get better profits from selling more electricity to customers. They provide their services at cost to consumers. Instead, they gain profits from investments in their physical infrastructure, like their pipes and lines and such, that provide the service. So the more infrastructure a utility builds, the more profits it can make. So now let's check out their net income. We see an improving trend over time, which is good. I normally don't bother looking at price to free cash flow trends for utilities, so I'll skip it for this video. Let's check out their debt. So as you would expect for utility, their debt is increasing over time. Utilities typically have debt on their balance sheet to help pay for various capital spending needs. Now, other useful metrics to look at are interest coverage, which is helpful because if interest rates go up sometimes, then that can cause a heavily capitalized utility company to refinance maturing debt obligations, so cost of capital going up is never good. And of course, even though people always need electricity, you can still have people who can't pay their bills if the economy gets too bad. So if utilities can't manage their interest expenses enough, then they may have to go look into selling their assets. Another useful metric can be looking at dividends paid out relative to operating cash. But for this analysis, I'm going to move quickly. This will be an hour-long video, so just realize you might want to go deeper. That's what she said. Okay, let's keep boogieing. The fourth most popular utility stock in the poll, with 10% of voters, is another utility stock I used to own, and that's Con-Edison. My best friend who lives in New York was the guy who introduced me to Con-Ed originally. He's the guy who pulled completely out of the market at the end of 2019 due to concerns about the impact of the coronavirus, and he's still waiting on the sidelines. He's making the classical mistake of trying to time the markets, but who knows, maybe this time he'll get lucky. I was just talking to another good friend of mine who's a professional wealth manager this morning, and he finds the market super frustrating right now because he feels it's way overvalued, but it keeps running. He expects a hefty correction. Con-Ed is one of the largest utility companies in the US and operates in New York and New Jersey. Con-Ed has a weak yield for utility at 3.79%, a solid payout ratio at 72%, a 5-year dividend CAGR at 3.27%, and then an incredible 46 consecutive years of dividend growth, which is a big factor why I invested in them long ago. In the last 25 years, Con-Ed has a great 9.44% annualized return, which is more than SPY, which has had 9.28% return over the same time period. Impressive, my young Padawan. Let's see what their stock has done in the last 12 months. Con-Ed is trading around $82 a share, below the 52-week high of about $95 and above their 52-week low of $62. So a slight downward trend. They have a high PE of 20.6. Looks like you pay a premium for those amazing consecutive years of dividend growth. Let's check out their stock price trends. So we see a nicer stock trend line for Con-Ed. Let's look at their dividend payouts. So pretty similar looking trends across both of them. How about their yield trend? So a less compelling stock to jump into when looking at this metric in isolation, but nice for existing shareholders that are getting that stock appreciation. Let's take a look at their earnings per share. So I like the nicer EPS trend that Con-Ed has. How about shares outstanding? Okay, I like Con-Ed's more gradual trend up here. Let's check out how their assets are trending compared to their liabilities. So a nice assets to liabilities trend for Con-Ed. Let's see how their revenue growth looks. Not a revenue trend I'd like to see for Con-Ed. Would a slight uptick kill you? Let's check out their net income. So this is the more important metric and we see their profits are increasing. Nice. Let's check out their debt. As expected, an increasing debt line, but slightly more conservative. Okay, let's move on. The third most popular utility stock in the poll with an incredible 47% of voters is one probably popularized in Monty Python's Holy Grail, which is a movie you must see if you haven't yet, in which there's a scene where a band of knights who say "Ni" and whom encounter King Arthur and his followers, and those knights demonstrate their power by shouting "Ni," and then they refuse King Arthur passage through the forest unless he gifts them a shrubbery. Trust me, it's awesome. Now their ticker is NEE, but their actual name is NextEra Energy. They have 46,000 megawatts of energy capacity and is the largest utility by market cap, and they operate primarily in Florida and are the world's largest generator of renewable energy from the wind and the sun. They also operate in natural gas, oil, and nuclear energy. Now secretly, NE is my favorite utility, only I don't own any because I've always sat on the sidelines thinking they're too expensive. I've done that same thing to Amazon, Apple, and a bunch of other great companies, so someone tell me to stop being an idiot and start buying already. NE has a really low yield for utility at 1.88%, a great payout ratio at 61%, an amazing 5-year dividend CAGR at 11.5%, and then an awesome 25 consecutive years of dividend growth. That CAGR is really amazing, utility or not. In the last 25 years, NE has had an amazing 15.41% annualized return, which blows SPY's 9.28% out of the water. Holy guacamole, that's amazing. Let's see what their stock has done in the last 12 months. NE is trading around $301 a share, which is basically their 52-week high, and are well above their 52-week low of $175. They have an insanely high PE of 41.6, which is part of the reason why I've been sitting on the sidelines holding my, well, you know. Let's check out their stock price trends. Quality stocks have a tendency to keep running, and you can see NE has been knocking it out of the park. Let's look at their dividend payouts. So here we see NE's trend line of dividend payouts has been going up faster than the others, which we already knew about because we saw their dividend CAGR was higher. How about their yield trend? So again, this helps paint the picture while I'm sitting on the sidelines. I keep thinking it'll pull back, but it keeps running, and this metric is showing how it's becoming less compelling to jump in as time goes on. Let's take a look at their earnings per share. As you might expect, NE has a more compelling EPS trend line than PPL or ED. ED is not the greatest ticker if you're a guy. How about shares outstanding? So a similar trend line, just less aggressive than say PPL's. Let's check how their assets are trending as compared to their liabilities. Here we see that NE's assets are growing significantly faster than their liabilities, in an even more pronounced way than the others, another great sign. Let's see how their revenue growth looks. So I like seeing NE's gradual trend up for revenue, nicer than the other two. Let's check out their net income. A solid profit line for NE. Let's check out their debt. So they're following the standard utility trend here. One has to wonder what happens when the chickens come home to roost. Okay, moving on. The second most popular utility stock in the poll with an incredible 65% of voters is none other than the name popularized by the nickname of a movie star who won the Academy Award for Best Actor in a Western called True Grit. The original cowboy himself, John Wayne, aka the Duke, and of course I'm talking about Duke Energy. They own around 60,000 megawatts of power, which they distribute to over 7 million customers in the Carolinas, Indiana, and more, spanning coal, natural gas, oil, nuclear, plants, and wind. I wonder if the Duke brothers who formed Duke Energy had a sister named Daisy. Duke has a great yield at 4.14%, a payout ratio at 76%, a conservative 5-year dividend CAGR at 3.52%, and a decent 9 consecutive years of dividend growth. In the last 25 years, Duke has had a 8.79% annualized return, which slightly underperforms SPY. Let's see what their stock has done in the last 12 months. Duke is trading around $93 a share, which is below their 52-week high of 104 and well below their 52-week low of 62. They have a high PE of 33 and had a quick recent run-up due to news that NE evaluated acquiring them. Let's check out their stock price trends. So, other than the last 12 months, they've been trucking along nicely. Let's look at their dividend payouts. I see what I like to see in a dividend stock, a nice solid history of increases. How about their yield trend? So, Duke's price to dividend has remained fairly constant, so if you were investing in them a few years ago, you're probably still feeding it. Let's take a look at their earnings per share. Duke has an okay EPS trend, better than PPL but worse than NE. Do you see how you can look at a metric like yield and guess at a bunch of other metrics? It often goes hand in hand. As yield goes up, the other metrics look worse, which speaks to their overall risk. How about shares outstanding? Duke has a pretty aggressive share increase trend. Let's look at Duke's assets to liability trends. So like the others, we're happy to see assets growing faster than liabilities. Let's check out Duke's revenue growth. So this is one of the things I love about Duke, the best revenue growth of the bunch. Nice. Let's check out their net income. And we see another reason why I like Duke. Nice profit growth. Good job, fellas. Let's check out their debt. Now, as you would expect for utility, Duke continues to drive up debt to help fuel their growth. Okay, now before we hit the number 1 stock in the poll, I'll tell you that the number 7th spot in the poll was none other than Dominion Energy, ticker D. I could make a joke about Big D, but I'm far too mature for that. And then the 6th place finisher was American Waterworks, ticker AWK. Nice to see something other than the standard energy utility. So the number 1 stock in the poll with an outstanding 68% of voters is one whose name is known for having some of our prettiest women in the US and A, like Borat says, and I'm talking about Southern Bells, or more specifically, Southern Company, ticker SO. Do I constantly have hotties on my mind? No, of course not. Sometimes I'm thinking about video games or dividends. In all honesty, did you know that it's a myth that guys think about sex every 7 seconds? In fact, when scientists actually did a survey, the average man tallied 19 sexy time thoughts per day. Women think about sex 10 times a day, and food 15 times a day, and then sleep 9 times a day. So if you really want to impress a lady, it's food, sex, sleep in that order. Kind of makes sense, doesn't it? I wonder where dividends fit in for women. So Southern Company is a gas and electric utility holding company that is the 2nd largest in the USA in terms of customer base, serving 6 southern states with 60,000 megawatts of power spanning coal, natural gas, oil, nuclear, and wind. Southern has a great yield at 4.35%, a high payout ratio at 81%, a conservative 5-year dividend CAGR at 3.39%, and a great 19 consecutive years of dividend growth. You know, I think I need to get me some more Southern Company. In the last 25 years, Southern Company has an awesome 11.36% annualized return, which nicely outperforms SPY. Kudos, Southern team, kudos. Let's see what their stock has done in the last 12 months. Southern is trading around $59 a share, which is below their 52-week high of $71 and above their 52-week low of $42. They have a decent PE of 19. Let's check out their stock price trends. Southern has a decent middle-of-the-road trend line. Let's look at their dividend payouts. So here we see Southern has a nice steady trend, not as nice as NE, but that's part of what you give up when you have a nicer starting yield. How about their yield trend? So Southern Company has been trending basically flat, so a consistent yield which is becoming slightly less compelling over time. Let's take a look at their earnings per share. Southern has a slightly better EPS trend than PPL, but nothing as nice as NE. How about shares outstanding? Southern has a slightly nicer trend than most others. Let's look at Southern's assets to liabilities trends. Southern, like the others, have their assets growing faster than their liabilities. Let's check out their revenue growth. Southern has a nice trend here, second only to Duke. Let's check out their net income. Southern has a slightly increasing net income trend, more in line with a PPL than a Duke. Let's check out their debt. Southern has a similar trend as the other utilities of increasing debt. Okay folks, there you have it. The top 5 utilities dividend stocks is voted on my Dividend Discord server. Now I want to do a quick shout out to ATTRIBUTIONS, who just signed up as a Patreon champion. ATTRIBUTIONS left me a nice note when he signed up saying, "I really appreciate everything I've learned from your videos and others on the Discord server. Congratulations on hitting an amazing milestone. I wish you all the best." He was referring to my last video called Huge Dividend News about my portfolio, where I revealed a big change to my dividend portfolio and life. Thanks, ATTRIBUTIONS. I really appreciate your kind words as well as getting to know you on Discord. Now I want to tell you all an inspirational story I found online that I think you'll like. In a small Italian town, hundreds of years ago, a small business owner owned a large sum of money to a loan shark. The loan shark was a very old, unattractive-looking guy that just so happened to fancy the business owner's daughter. He decided to offer the businessman a deal which would completely wipe out the debt he owed him. However, the catch was he would only wipe out the debt if he could marry the businessman's daughter. Needless to say, this proposal was met with a look of disgust. The loan shark said that he would place 2 pebbles into a bag, one white and one black. The daughter would then have to reach into the bag and pick out a pebble. If it was black, the debt would be wiped, but the loan shark would then marry her. If it was white, the debt would also be wiped, but the daughter wouldn't have to marry the loan shark. Standing on a pebble-strewn path in the businessman's garden, the loan shark bent over and picked up 2 pebbles. Whilst he was picking them up, the daughter noticed that he picked up 2 black pebbles and placed them both in the bag. He then asked the daughter to reach in the bag and pick one. The daughter naturally had 3 choices as to what she could have done. Number 1, refuse to pick a pebble from the bag. Number 2, take both pebbles out of the bag and expose the loan shark for cheating. Number 3, pick a pebble from the bag fully knowing it was black and sacrifice herself for her father's freedom. She drew out a pebble from the bag and before looking at it, accidentally dropped it into the midst of other pebbles. And then she said to the loan shark, "Oh, how clumsy of me. Never mind, if you look into the bag for the one that is left, you will be able to tell which pebble I picked." The pebble left in the bag is obviously black, and seeing as the loan shark didn't want to be exposed, he had to play along as if the pebble the daughter dropped was white and clear her father's debt. Moral of the story? It's always possible to overcome a tough situation through out-of-the-box thinking and not give in to the only options you think you have to pick from. I want you to remember that the next time you face a very difficult time in your life where you feel you're in a no-win scenario. Remember, you can always figure a way to succeed, even if it seems like Kobayashi Maru. If you don't get that reference, then stop watching this video immediately and go watch Star Trek II Wrath of Khan. You can thank me later. And thank you so much for watching all the way to the end. Leave me a comment if you did, I'd really appreciate it. These videos take a lot of time and energy for me to create, so liking my video is a simple way you can thank me. Please hit the thumbs up button and subscribe, and consider signing up on patreon.com to support me. And don't forget to check out my free Dividend Discord server. You'll love it and you'll get a chance to meet a bunch of like-minded investors. Thanks, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.